The 4 hour and 15 minute charts are the easiest time frames to trade, and in this video I'm going to give you a simple no BS trading strategy that you can download for free in the pinned comment down below. It's been tested on thousands of traders, but let's not waste any more time. Let's get straight into it. Okay, so for this trading strategy, all we're going to use is the 4 hour and 15 minute chart, and when you use the 4 hour and 15 minute chart together, you have an absolute money maker, because the 4 hour chart acts as your higher time frame daily bias. You do all your analysis on there. And then the 15 minute chart is where you get your high probability sniper entries. So I'm going to show you how you can use the 4 hour and 15 minute chart. And there's really two ways of doing it. Number one is a liquidity based approach, right? You look for liquidity on the 4 hour chart, you wait for a sweep on the 15 minute chart, and then you look for your entries. Now that trading strategy right there is by far, hands down, the highest probability setup in all of trading. However, it is pretty difficult. Like, I won't lie to you, that's a pretty difficult, pretty advanced trading strategy. Now I'm not going to talk about that one in this video because, like I said, it's pretty advanced. But for this trading strategy I'm going to give you in this video, it's purely fair value gaps only, right? And if you don't know what a fair value gap is, go look at this picture on screen now. It's as easy and as simple as I can possibly make trading. Now what we're going to do is we're going to get on the 4 hour chart, and again, this will work for any market that you trade, right? It doesn't matter that this is on Euro JPY. And just look at this bit of price action, right? I've deliberately chosen this disgusting, ugly mess of price action. Price is kind of consolidating. We have this huge gap. You know, I'm going to show you it in this difficult bit of price action to prove to you that it worked on literally any market. I mean, look at Euro JPY out of all pairs, which is actually a pretty nice pair once you start trading it. But, you know, of course, forget about this massive void in price action. So what you're going to do with a 4 hour chart is you're going to mark out the most recent fair value gap in price action, right? Now, the reason we're doing that, and this is the fair value gap that we're looking for. Now, the reason we're marking out the most recent fair value gap in price action is because as day traders, scalpers, and even as swing traders, we only care about the most recent bit of price action. I see so many traders who come on, they come onto the charts and they're marking this fair value gap, this inversion fair value gap, order blocks. Like, why are you marking this order block on the 4 hour chart when you scalp the 1 minute chart? Do you know what I mean? Like, we only care about the most recent bit of price action because we want to see what is price most likely to do next. Because as traders, 90% of trading is bias, right? And bias really is what is price most likely to do next. No one knows for sure, but what is it most likely to do next? So when you mark out this 4 hour fair value gap, what we really want to see, this is a bearish 4 hour fair value gap. What we really want to see is, and now let's imagine this is the 15 minute chart. This is what we want to see. We want to see price hit this 4 hour fair value gap on the 15 minute chart and then aggressively shoot off. Give us a high probability retracement, ideally on a new fair value gap, this time all on the 15 minute chart, and then shoot off, right? This is what we want to see on the 15 minute chart. And this is how you use the higher time frame, the 4 hour chart, and the 15 minute chart together. The 4 hour chart is your higher time frame, daily bias time frame, or analysis, whatever you want to call it. And what we really want to see, and this is the key takeaway of the video, is you want to see confirmation. Whatever trading strategy you use, you always need to see confirmation. When you're using liquidity, your sweep is the confirmation that you're on the right side of the market. There always needs to be confirmation. I cannot stress it enough, you cannot just randomly start buying and as soon as price hits this 4 hour fair value gap on the 15 minute chart and just put your stop wherever you think is sensible. You cannot do that. You need to see confirmation, and the easiest way to wait for confirmation is to wait, or to get on the 15 minute chart, wait for price to hit the fair value gap, shoot off, retracement, enter on whatever you like, ideally a new fair value gap, and then ride price down. So let me show you what this looks like on the 15 minute chart. But remember, the whole reason of marking out this 4 hour fair value gap is this is our higher time frame, right? We need to be using a higher time frame, right? And then we need to see confirmation on the lower time frame that this is actually going to hold. So now we're going to get on the 15 minute chart and we're going to start looking for our confirmation that this fair value gap is actually going to hold, right? We're not just going to guess randomly. We want to see confirmation that this is actually going to hold. So what we have here, so this is the 4 hour fair value gap. Price comes up at key time of day. So look down here, you see this black, you get the point, right? You can see the black time there where it's 9:30. This is New York time. So this is Asia session. So price hits this key 4 hour fair value gap that we've been talking about. Now, is price actually respecting this 4 hour fair value gap, right? Let me ask you this. Is price respecting this 4 hour fair value gap or not? Right? Has price started to go down? Has it done nothing like this? Or has it done this instead? Has it just smashed right through it? Right, hopefully pretty clear. Price has hit the 4 hour fair value gap and has started to drop off in the opposite direction. So this is the confirmation that we're looking for, right? That this market is actually bearish, right? That this 4 hour fair value gap is actually bearish and it's actually going to hold. And again, if you like you know, if you read like candlesticks, like, you know, you might like, oh, Atif, look, there's a doji here too. This is more confirmation that price is weak. Whatever you like, right? If you like that, by all means do it. But for me, the easiest way is just to simply wait for a bearish fair value gap to form on the 15-minute chart. Now, I know this isn't the best fair value gap, but again, I keep saying this, and I don't say this too much, but you know, not every entry you're going to get is going to be easy, sniper entry, 10 risk to reward ratio, no drawdown, no retracement, just straight to take profit. That is not what trading's like, right? This is realistic trading. So here we are, price hits the 4-hour fair value gap, it shoots off, it gives you a awkward fair value gap, admittedly. You know, if you want to get on the 5-minute chart and start looking for a new fair value gap, absolutely go for it. And again, if you haven't got the PDF, go look down below in the pinned comment. You can find this. You can find all the screenshots. And it's on the 15-minute chart just for simplicity, but you can use the 5-minute. As long as you use the 4-hour chart, you do not change the 4-hour chart with the 1-hour chart, because this will not work. And all those traders you saw at the beginning, they all used the 4-hour chart and a lower time frame, the 15-minute, 5-minute, 1-minute chart, right? They did not use the 1 hour and 5-minute or 15-minute chart. So here we are. What you're going to do, and remember, this fair value gap here is our confirmation, right? Remember, this is a big bearish 4-hour fair value gap. We have another fair value gap here. This is our confirmation on the right side of the market. All we're going to do is look to enter. Now, it's not the best entry in the world, but you can make money from this, right? Here we go. So enter on the fair value gap. Now, for your stop, this is where it gets pretty interesting. Because it's not liquidity and it's not a liquidity sweep, you don't have to put your stop at the old high, right? But the minimum you must do, or must put your stop, is at this high here, right? This is the high that formed the fair value gap. I'll put the picture again of a bearish fair value gap on screen now. Remember how it's 3 candlesticks? This candlestick here forms the fair value gap, so the stop must be at least here, right? You know, if you want to put it here for a really safe one, by all means go for it. But this is what we need right now. The 15-minute chart is a beautiful time frame. You can get so many easy liquidity targets. I mean, let's just see this, right? Easy peasy liquidity targets. Lots of my private students, they absolutely love targeting liquidity. For me, you know me, easy, free risk to reward ratio, just like that. If you do this over and over and over again, the repetition is what makes you profitable. There's a reason why I keep giving you the same strategies over and over again. It's the repetition that gets into your subconscious mind. If you know what that is, you only learn by repetition. So practice, practice, practice. Make sure you go watch this playlist on screen now where I give you even more examples.